Welcome to the On the Rise podcast, where we talk about time freedom, passive investing through real estate, finance, mindset, and how to integrate your faith into your work. Let's dive in. Quick disclaimer as always, I'm not a CPA, I'm not an attorney or a financial advisor. This is not financial advice. I'm not telling you or anyone else what to do. The views and opinions expressed in these podcasts are provided for education and informational purposes only and are not necessarily the views of my employer. Welcome to the On the Rise podcast. I'm your host, Nick Stromwall. We've got an exciting guest today. Welcome up, Matt Johns.
Nick, I'm so grateful to be able to spend this time with you. I've enjoyed all of our conversations up to date, so just getting to share it publicly, I think, is a gift to the world.
Yeah, it's fun when you have had a couple, pre-meetings with people. You've interacted with them online through social media, and then you've actually had a call. I feel like I already know you a little bit from the calls that we have, but maybe I'll just briefly introduce you and then let you fill in the gaps. So Matt is the managing partner of Honey Hive Capital, where he helps Christian investors and philanthropists put their capital to work in a way that actually lines up with their faith. So tell us more.
Yeah, Honey Hive Capital, it's an investment banking firm that really it's all focused on private market investments. Real estate's included, but it could be anything. And the private equity side of things, don't really touch hedge funds or crypto, those kind of things. It's just, but all the deals have to pass through a negative screen. So the Christian side of it comes in that primarily with the deals. We work with anybody who's Christian, not Christian, of any faith, but the deal itself has to pass through a negative screen in order for us to work through it. So basically, I won't work with any deals that violate my faith values. And for investors, that gives them at least a little bit more narrow perspective of what they can expect that hopefully lines up with their faith values too. If it is Christian investors, it may not be. In some cases, we work with institutional folks too. But so that's one side. And then I do have a podcast and a newsletter called Christian Alts, which is exclusively for Christian investors, and really just it provides alternative investments through a Christian lens. So it can be anything. It can include Bitcoin. It can include talking about companies IPOing. Talked a little bit about SpaceX over the last couple of weeks, and that the nuances of that have a Christian tinge of interest. So I'm very, very intrigued by the power of alternative investments, of private markets and what they do. I like to say that private investments, private markets are where the ground is tilled for the foundation of the world that we know. And we see that very tangibly in real estate, of course, but that applies in all these different areas. Even like you think of in terms of a startup, these startups are what become the behemoths. Facebook didn't start as this multi-$100 billion company that was... it was just started by a guy in his Harvard dorm room, right? So that ended up having to get funded down the road, and that private market deal became something that really, literally weaved the internet together in a way that we had never seen before and has built it into something that we know today. So these private market deals really have significance. And I feel like that if we can inject these values in early on, at least the foundations have a better foundation for everything else to build upon it, to where we may have those values continue on to where it may be beneficial to the world and building the kingdom that we'd like to see in heaven here on earth.
That was amazing kind of background. Tell us a little more about your work history. How did you get into this space? And then I would love to ask you a few questions. I see your book kind of hiding behind you there. I want to hear more about that.
Yeah. I'd love to tell you about my book. To me, it's a gift. The book is a gift. I came into this very green, if you will, into the investing space. Like you, Nick, I started in nonprofits and ministry. Really, I was started in what was called the Jesuit Volunteer Corps. So it was this volunteer organization where I got sent to Portland, Maine. I told them I don't like the cold and I can't cook, and they put me in as the breakfast manager of a soup kitchen in Portland, Maine. And I spent a year there. Got to know the homeless very, very well. Many of them became very good friends. But from there, I came back down to Texas because I couldn't handle the cold any longer. And I ended up working in youth ministry for a number of years. And then Catholic Charities, which is a large nonprofit nationwide, but we have individual, I guess you would say individual agencies in different dioceses around, about 160 of them around the country. And so I worked with the one here in Houston for a long time, doing a bunch of different things. And it ranged from anything from community relations to disaster recovery and fundraising. And I really thought that was my path. I really thought that I was going to be pursuing CEO of a large nonprofit. at one point. So I ended up getting an MBA. And while I did that, because I was told to do so, I thought that was what I needed to do to achieve that end. However, when I was there, I recognized that I liked finance. I loved working in spreadsheets. I had never thought of myself as a Microsoft Excel guy, but I always thought of myself as a Microsoft Word guy. But then getting into the spreadsheets and realizing the nuances of finance and what it can do, I was really, really intrigued by that world. And I said, okay, I've got all these experiences over here, and surely there's a way that I can apply that in the finance world. So it eventually led to Honey Hive Capital, and I tried to go secular. I tried to do that at first. It didn't work. I had to integrate my faith values because I was confronted with these issues. And one of the biggest issues that hit me early on was ESG. Because I'm coming from the nonprofit world. If in the nonprofit world, you've got a problem. If your mission doesn't work, you don't have a reason to exist. There's no money that should be flowing in, at least, if you are not achieving that mission. And with ESG, I saw a really strong mission, something that was there that, impact the world in these environmental, social, and governance ways. Europe had adopted it fully. The United States was pretty close to full adoption of it too at that point. But what I saw when I looked into it kind of floored me. These are some of the smartest people I'd ever worked with in my life. And they were calling ESG impact. And regardless of what anybody thinks about the E, the S, or the G sides of it, it's the outcomes that I had a hard time with. Because I saw that these initiatives were being pursued, but I could not see the outcomes. I couldn't see what they were actually achieving. And trillions of dollars were being directed toward this initiative in the name of impact. Mm-hmm. And the more I looked into it, the more I realized those outcomes weren't there. So I went back to my nonprofit roots. And I saw this, in my head, it was just immediately clear that this logic model approach that nonprofits have come to do so well with to achieve their mission was not being applied in any way, shape, or form, as far as I could tell, in the finance world. So that's where the book came from. It was just from my own struggle understanding this finance world that I had walked into and saying, all right, if we really do want to commit to and then create impact in the world, how do we get to those end outcomes that we really are seeking? So that's what it does. It takes this brand new model, this brand new approach toward finance of saying, okay, the logic model is simple. It's just inputs. You have your inputs of things that you're the people, the resources, whatever it is. Then you have outputs. Those are the people you're feeding in a distribution line or something, right? Like that, right? And then the outcomes are, because these people are fed, how are their lives changed? How has the community changed? And that's what we want to see in finance. So Honey Hive Capital is very much directed toward how are we going to create those outcomes with investor dollars. And I'm not trying to do anything with it's not all impact investments or anything like that, but I do want to see that foundation is at least set up to where it's not going to be supporting things that will lead to negative outcomes in the world.
So let's have a little double click on this, maybe make a little masterclass. So if a traditional investment is going to give you, let's say a 7 or a 10% yield, what makes an investment different if there's an intentionality behind an impact focus? Does that mean your average return goes down or goes up, or how do you measure what impact actually means?
That's a great question. The measurement piece is the hardest piece. And I don't think anybody in the finance world really has their finger on that very well. I've been looking. And but the measurement's the tough part, right? So back to your original question, what makes an impact investment? So let's say you're getting your 7 or 8% yield. That may be comparable to something without impact. But let's just say in the real estate world, you're pursuing something that is in a certain community where affordable housing is more needed. So that could be an impact investment. If you're able to lever some government dollars in there along with investor dollars to create housing for people who otherwise would have a difficult time accessing it, and then need that housing so they can elevate their own lives and pursue the ends that they're not just trying to achieve, but called to achieve, hopefully. But when it's, and I hate to say it's just about the money and about the actual mission piece, it's about the spirit behind it too. And if you look at the individuals who are guiding these things, you can, I don't want to say you can tell, that's not the right way of saying it, but there's something different between people who are pursuing an impact investment for the sake of financial returns with good marketing, with impact marketing, versus those who are genuinely seeking impact for impact's sake. And that spirit behind it carries forth into the investment itself because it goes into the management. If a real estate property is going to get built and developed, it has to be managed somehow with some sort of spirit. And let's just say that spirit is one of financial ends. We had the marketing piece, the impact marketing piece, right? But let's just say on the other side of it, they just want the financial side. How quickly are they going to evict? How quickly are they going to reach out and say, we want to hire from within those at our complex? How quickly are they going to look at the needs of the people that they're serving as part of this deal, as opposed to the opposite? Let's just say they come in with the spirit of, hey, we really do want to help build this community, and we think investors can benefit from some great returns. And there are deals like this. I'm not, of course, going to point to anything, but they do exist. When you've got the good spirit behind it, they can come in and you can back this sponsor with your financial investment, and they can go in and they can make a genuine impact on that community, where it's not just great returns coming back for the investor and a solid foundation where people are getting housed that otherwise would have difficulty getting housed, but there are more things that get embraced as just the nature of the sponsor's desire and intent in that community.
Yeah, it's interesting. Maybe just flipping the script a little bit. You can run a multifamily property and squeeze out every last ounce of juice, so to speak, in order to maximize investor returns. But that might mean then not doing a good job caring for your residents. We call our tenants residents because even what you name people matters, right? We don't have front office managers. We have community managers. And we like to have, monthly events at our building where we're facilitating interaction amongst residents and free food and supplies and bringing in some partner organizations to help. So it's different thinking through, I'm going to make people as much money as possible, right? Versus I'm going to give people a really good return, protect their capital, but I'm also going to try to uplift the people in the community. So the intention behind how and why you go about certain things really matters. And you can pick sponsors that will maybe give you a better overall return, but at what cost, right? Or you can pick sponsors where there is a element of impact, whether that's community enrichment, whether that's trying to help the residents become homeowners or help them with different services. There's not a one size fits all approach. For some people, it's, hey, we're going to provide quality housing at an affordable price. That's a great service. And if you can add on, hey, we're going to actually try to help people get to know each other. I think there's a crazy stat out there that a lot of people who live in a multifamily dwelling, they maybe only have like 1.6 friends. And I think that's a stat I recently saw. So imagine if we could create a community where people have 4 or 5 or 10 connections at that building because there's food and there's services coming in to provide opportunities for people to actually connect, and kids being able to serve. Next week I'm going to an event calling it Serve Day. So we're renting a bounce house, we're having a DJ come, we're having a food truck come, and some of our investors are coming literally just to serve our residents. It's going to be one of our pilot programs, but I think it's going to be really successful, not only at a property level, but at a team level. There's something powerful that happens when your very essence of why you do what you do is to serve other people. So I'm really excited about it.
I'm Zach Haptonstall, CEO and co-founder of Rise 48 Equity. Our goal is to help you protect and grow your wealth by investing in large multifamily apartment buildings. We do all the work as far as sourcing these large apartment buildings from the brokers, doing all of the on-site management with our vertically integrated property management company, doing all the renovations with our vertically integrated construction company. We completely rebrand the exteriors. We will renovate the interiors to our full platinum level scope, which increases the value of the asset to get that profit margin for the investors. If you'd like to learn about how you can partner with us on these exciting opportunities, and go to our website and set up a call with our team.
I love that. Now, tell me more about that. When you've got investors coming in, how did they respond when that call went out and you said, hey, we'd love for you guys to come join us? Or did they, maybe they asked for it? I don't know. How did that come together?
Yeah, some people didn't know how to respond. It's more of a pilot program. So we have kind of a subset of investors with a couple of our capital partners where their intention for why they wanted to invest was not only to get a return, but also to make a difference. So it was a little bit easier of an opportunity. But I also feel like your everyday investor, if they know their 50 or their 100 or their $500,000 isn't just going to get a good market level 2x return, but there's also some greater story behind it. I think if you had two options, you had to choose average investment and one with an impact focus. I think most people would probably choose the impact focus. There's financial
Mhm.
data out there where if you bring in some of these organizations, you can actually see your bottom line financials actually start to increase because you're helping people get to know each other. Then they want to bring their friends, which helps with vacancy rates, and then you get people staying and renewing leases, which helps with all the different financial returns that are out there. So the very essence of helping serve and uplift your people, in essence, comes around to bless you on the financial side too. Even though that's not the main motivation. It's not, hey, I'm going to implement this program with this organization because it's going to give me an X output. There is that benefit, but I think the intention is we want to help bless people. So some investors don't quite understand or know what to do with it yet, and others are excited and coming. I think we capped it at maybe 20 volunteers, and we got a full list.
Isn't that great? You had to cap it. I love that.
Yeah, I mean,
But
we'll see if it sticks. I kind of have a feeling this will be a new day for this opportunity to be expanded to some of our other properties.
when I think about that too, you asked the other question you asked was about measurement and how do you measure actual impact, right? And so vacancy rate it'd be a measure. It's an output, right? I mean, you're measuring an output that you have so many residents that you have impacted, so to speak, that are there. But how do you measure an outcome that their lives are materially better? And that's really, really difficult to do. And I know I'm kind of opening a can and bring this, but from the nonprofit standpoint, there are ways of doing that. You can measure certain points of satisfaction or financial ability even from the beginning. So maybe they were less financially able to, let's say, buy a home when they first come in, but by the time they leave, something is transformed in that time, and they're suddenly more prepared for home ownership or something like that. Or maybe it's even for non-affordable housing or living in an area that they've been pursuing to live in for a long time, but was less obtainable. So, but getting to that area of financial stability, that is something that's measurable just by having a quick survey of 2 or 3 questions every so often. And it takes a tremendous amount of intentionality on the part of the sponsor, though, to want to measure that kind of thing. So that's why we don't really see a lot of measurements on the actual impact of these things. But you do create a significant amount of, I guess you could say, subjective data on things like this, because you can go in there and you can have great stories of interactions between investors and residents. I was going to say tenants, residents, and
There's something powerful just being with other
yes,
people in an age where we got so um, divided on so many different things, like to meet with someone in person and to see a family and to meet the kids and to bounce around in the bounce house with the kids, which I plan on doing that. Um, it's really fun. So our community managers, like I've been kind of honestly shocked at how well they know the people. Um, and it's kind of a story that we haven't even really been sharing that much. I think we're missing an opportunity because when the community managers are getting to know the elderly in the buildings, and they're also getting to know the kids, and they're having monthly programming typically around the pool, and they're doing free food, and there's back to school backpack drives and Easter egg hunts and all these things. Like those are fun programs, but more than that, it's producing opportunities to connect, and I think people are starving for connection. And if we can start to pair in some services with some outside, whether it's Financial Peace University or some of these other networks of resources for our tenants, there's a ability to rise up our tenant base too. So I'm very, very excited about what this could mean for us as a team, and I think it's a great opportunity. I mean, when you get to serve and do something, there is a feeling that is produced that you can't pay for. That is
mm-hmm.
an intangible, joy bomb that goes off inside of you that a lot of people just never had a chance to experience. So giving people those chances, could be really sweet. So we'll see. Stay tuned. We'll have a special episode more about the Rise 48 Serve Day.
Yeah, I'll
Okay,
be
but
looking forward to hearing how that goes.
yeah, I want to hear more about your book. What was the genesis behind why you wanted to write it, and
Sure.
what's it been like so far as you've been
Yeah.
able to share more about it?
No, so Purpose-Driven Capital is the name of the book, and you got kind of the genesis of it based on my experience in the nonprofit world and coming into this finance world. But really, what it does is it creates a systemic approach to generate those outcomes that you want to see in the world. So it starts with the 3 capital impact forces, and that's your personal, your purpose, your mission are all driving those 3 things. But those then impact or affect the capital actions. So there are 3 primary capital actions: spending, investing, and giving. So and you could argue that saving could be a capital action too. I would argue that saving is investing, but that's a different story, a different debate for another day. But so the 3 primary capital actions are spending, investing, and giving. Those all lead to outcomes. And the outcome, if you buy a pack of gum, the gum company makes a little bit of money. The cashier interacts with you. There are outcomes that come from that, and they're first, second, and third degree outcomes with that, right? So, but if you want to really impact what each of those spending, investing, and giving actions does in the world and affects those 3 different outcomes, you have to drive it somewhere. And it all comes from your person, who you are, and what you were, I would argue, born to do, born to create, and born to birth into this world in its own right, just based on the different gifts and charisms that each one of us uniquely has, right? And this is one of the biggest problems with ESG too. And there have been, you got triple bottom line, you got 100 other different systems that have been tried, attempted to be implemented to create impact through finance. But for right now, we'll just say ESG because it's been the biggest one of recent years. But the problem with those is it doesn't allow for the uniqueness of the individual to create its own impact. So let's just say that my thing is the environment. I am going to make sure that the environment, in one particular way, maybe it's not even oil and gas. Maybe it's just, I want to preserve farmland. That's an environmental impact that I want to have because I feel really passionate about it. ESG may ding you for that and say, well, you're there, but you don't have certain, I don't know, your social requirements of whatever your board structure or whatever is don't meet our criteria. So therefore you don't qualify as an ESG option here. So what I wanted to do is say, no, don't worry about ESG as your outcome that you're aiming for. Focus on what you're called to do, what your uniqueness, what your unique perspective is on the world. Because I spent time with the homeless for an entire year, I have a very, very unique understanding of the plight of somebody who's been homeless and why they end up in that predicament and why they're still in that situation 5, 10, 20 years later. So I can provide a little bit different solution than other people who perceive what the problems are, as opposed to somebody who's existed within or very, very close to that circumstance. And that's where these 3 capital impact forces come into play. And these 3 capital impact forces are always at tension within us. But if we direct them with our personal mission and our purpose in this world, they will inherently affect our spending, investing, and giving decisions, which will then impact the outcomes that are going. So the 3 capital impact forces are stewardship, empowerment, and alignment. Lost it there for a second. Stewardship, empowerment, and alignment. So stewardship is, what are we doing with what we have? How are we taking advantage, not taking advantage of it, but how are we preserving it and making sure that it's given its best use? Empowerment is, how is that impacting others? How can we affect others? And ourselves for that matter. How does it affect the people, right? So the resources, the people, and then alignment is that mission element. It's that purpose element. How much is it directed toward the purpose that we are given in life? So how does this work? So there may be some tension that we say, all right, I believe that human trafficking is an evil that we need to eradicate. And in fact, I think that we need to give all of our resources that we have in our possession toward eliminating human trafficking. It's something I see. I know I had a relative who experienced it, something like that. But so that would be the empowerment side. Empowerment says we need to take these people out of this awful situation.
Yeah.
Now, the stewardship side would come in and say, wait. We can help a few people right now really, really well, which is a great thing. But what if we want to help a lot of people for the long run over time? Maybe we should pull back a little bit on that and think about how we can interject this and multiply what we have so that it can get there for the longer term. And then on the alignment side, that's where that human trafficking piece really comes in, because I should have started with that, I guess. But that's where it really drives that passion of human trafficking is where we want to put a lot of our efforts. So those three work in tension then to say, okay, instead of giving all the money we have, all of our possessions, and ending up indigent at the end, which is what empowerment would ask for, let's just say we're going to go out and we're going to find nonprofits that exist that we know, like, and trust, that we can work in partnership with over time, and not only give them our financial support and give them whatever resources they have, but we can actually go out and we can bring other supporters to come in, or we can go and volunteer with them or something like that, so that it leverages all of these other pieces together. Now, that's from a giving standpoint. So let's turn that into, let's say, investing. So if it's human trafficking, maybe there are organizations like the Tebow Group does a great job of this. And I've had the pleasure of meeting Tim and Tommy, the head of his family office, and the way they talk about it is it's all one and the same to them. They see, and I write about them in my book because I was so impacted by these conversations, but they take human trafficking and they say, no, this is not just something that we need to throw money at to let a nonprofit solve. There's technology out there, and this technology is a legitimate business in its own right. And so we want to take this money and we want to apply it into this technology that can then be used by law enforcement and others, even politicians, to affect change and to see the data there. But these are not charitable organizations in their own right. They're businesses. So maybe we can inject money into these businesses that will then produce the good that we want to see. But all of this is driven by this idea of mission, that we have this mission, this purpose, that we see a problem, pain point in the world that exists, and we want to help solve that pain point. So how can these three forces work in tension together to drive those spending, investing, and giving activities toward that ultimate outcome?
Sounds like you have talked about this a lot, because you hear the passion, but the framework is actually really solid. What do you hope would come about from investors thinking through this lens?
My hope is awareness. It's not even the outcomes themselves. It's awareness. So many investors think of their investment decisions as numbers decisions, that I watch a stock price and it rises or falls based on the sentiments of the world. You can talk about efficient markets and all that kind of stuff, but really it's based on the whims of the world and what people are choosing to do, buying or selling, right? So, but you don't think about the impact. I can't give an example. I'm not, as a registered representative, I can't do that. But you can take some firms and you can look at them and you can say, that is a great investment. However, I also know that what I'm actually supporting and putting my money behind is doing something that is not ethical. And I am therefore supporting that unethical activity. And that's even more true in private markets. Because in private markets, in public markets, it's already kind of done. You're not like injecting money for the sake of, like, it's secondary stuff. So you're going in and you're buying interest in a company, and the company's not materially benefiting necessarily. They're just getting your support, right? In the private markets, they are materially benefiting directly because your money goes to them to do something with that money. And then you are benefiting directly from those activities. So whatever the activities that are on that other side, if there's something you would not directly put your money into, you are indirectly putting your money into it, but actually materially benefiting from whatever that is. So we have to start thinking about what that means holistically in our world. And you are creating an outcome, whether you like it or not. You are creating something that's happening in this world. But most investors, I would argue that 90 some odd percent of investors would never want to. In fact, Wells Fargo did a study on this. I use this number, but 94% of investors want their investments to line up with their values, whatever it is. Not necessarily their faith, but their values. But I would argue that less than 10% actually know or even care what's happening once they put their money into something. And it's not a problem per se. It's the reality. It does create problems, but it's just the reality of where we are.
Let me change that, because I think I totally went with you. And I think for most people, a majority of their investing is their financial advisor. They set a target date fund and they let it ride.
That's right.
That's a broad stroke, but it's actually true for a lot of people. How do we change and flip it so that 90% of people are actually starting to follow that Wells Fargo study and invest according to their values?
I think the best lesson is pain. As much as I hate to say that, it's the reality. So ESG though, I think ESG is going to turn into one of the biggest blessings for people's awareness, because what it did is it became such a public political issue. People started thinking about it and talking about it. And for the first time, people said, wait, no, like 70% of that's awesome, but then there's 30% there that I don't want to have anything to do with. But all of a sudden, I'm told that is what I have to do. That something's not right there. I want my version of impact, not yours, So I think that a little bit of pain goes a long way in this regard. But quite honestly, I think it's just a matter of making it more the norm, and talking about it more. And is kind of cliche as that sounds, we do need to have these discussions more openly. I think financial advisors, I don't want to put a responsibility on them, but they do have fiduciary responsibility. And financial advisors, having been in and around that world, the modus operandi for most is talking about how do we generate the most returns from a financial benefit perspective for our clients. They don't talk about the material changes that are being made as a result of those investments. They're not necessarily trained to, for that matter. And so I think that there's a lot of responsibility in that side of the industry, if we genuinely want to get there. And I think the desire is there at a surface level, but I think when you get down to the nuts and bolts of it, and you realize how difficult it is and what the implications of that are, it gets pretty tough. But I'm seeing a huge wave of financial advisors who are getting these questions from their clients, and they're starting to ask the questions themselves. They want to know, because they realize they're, participating in these things, and they have a certain obligation or a certain weight that they're carrying as a result. So I think there is a wave happening. I think the conversation just needs to be made more broadly. The CNBCs of the world, they do an awesome job at what they do, but there are some things that I think they have segments like Your Money, Your Impact or something like that. And that's good, So there are things like that I think you start talking about the stories themselves of actual changes that are made. And I'm not even talking about the positive side. We talked about affordable housing earlier. I'm just talking about avoiding the bad stuff. Yeah. If we can avoid doing things that are causing harm in this world, if we're genuinely avoiding harm, just think about the impact that alone would make. And especially and I think about it from a Christian faith perspective, of course, if we can base things on our Christian faith values, which quite frankly, the majority of the West adheres to some way, shape, or at least some degree, we would see a progressively better, intrinsically better world that we live in right now, and hopefully one that prepares us better for the next life. Well, Nick, I do need to get going in just a minute here, so I don't know how you want to wrap this up.
Yeah, tell us.
I'm going to need to in just a minute.
Yeah, tell us where people can learn more about you, and then we can go from there. We'll have to do a second episode.
Yeah, I guess so. This has been too fun. LinkedIn is my place of refuge, I guess I should say. Cool. So just look for Matt Johns, either Christian Alts or Honey Hive Capital on LinkedIn.
Awesome. And can people buy your book? Where can they get it?
Oh, by all means, yes. It's available on Amazon for, actually the audiobook should be out here in the next 2 weeks.
Oh, sweet.
So paperback, hardback, and soon to be audiobook.
Awesome. Well, thanks for your time. Appreciate you, brother. Looking forward to being able to hang out with you soon.
Thanks, Nick. Looking forward to next time.
Thank you for hanging out with us today and for listening to the On the Rise podcast. This show is for entertainment purposes only. Nothing said on this show should be considered financial advice. Before making any financial decisions, please consult with a professional. This show is copyrighted by the On the Rise podcast. Written permissions must be granted before syndication or rebroadcasting.